Hi traders, I've got a chart request here for pound against the Kiwi dollar, and it's potentially a longer term play because they're asking where could it be over the next 2 or 3 months, and those are the golden questions, seeing you don't really know what will be in the next minute, let alone the next week or year. But I'll start by bringing up the longer term charts here. So I think this is a 10-year chart or 20-year chart. And you can see that since 2001 it has been going down very steadily, or quite aggressively in fact, with a high of back of about 3.65, lows around 1.8, and we're currently around 1.9. And now if I was looking at this purely as a chartist, I would say this probably is an impulsive wave. It's more likely to be a correction, which would probably imply lows over the future months, years, etc. Then if we look at what's happening in New Zealand and what's happening in the UK, we had inflation report yesterday. That's at 14-year lows. Potential now for Bank of England to not increase their interest rates 2016, and at the same time we've got RBNZ likely to be raising rates once or twice this year, which is likely to attract attention. So on that view alone, you would expect price to be going down on the interest rate to differentials. But there's another way of looking at this as well, because at the same time, if I bring up some other charts now, if for example pound against the US dollar, it's been going down very aggressively, and this has been in the sell-off as the markets have realised that the Bank of England aren't going to be raising interest rates very soon. But how much of this is already priced in? Now, an interesting article I read this morning is pointing out that whilst inflation is obviously not great, it's also, as Carney pointed out yesterday, it's also not likely to be bad for long, in which case you would imagine speculators to in future be buying again, to anticipating the rate rises even in 2016. They're not going to be waiting for the rate rise, they can be buying it before that happens, anticipating it. So there is an argument here for some sort of pound strength over the coming weeks or months. Employment's not that bad. It's a completely different scenario to Europe, where they are probably heading to proper deflation. That is where consumers are holding off buying products for fear of it being less value in the future. And in the UK, okay, oil prices are lower, inflation's not so high, but that's not going to prevent them from buying TVs, is it? So it's not going to be all out deflation, and even if it does start to go negative for a while, it's not going to be a long-term thing, and raising interest rates is still on the card of Bank of England. So at the same time, it's also possible that on the Kiwi dollar, we may have seen a lot of that pricing on the anticipated rates. So where I'm going with this is, if I look at the short-term charts, just for the last couple of years, so 2011, 2000, and currently, well, 3 years worth of charts, 4 years worth of charts, technically there is potential here for a head and shoulders pattern, which is a bullish signal. If we are seeing, so you can see here's the head and shoulders, which would have price come up over here in the future. Right now, however, if you're looking over the next 2 or 3 months, I can safely say that we are within a range. It's not in a trend over the past 3 years in my books, because we're not, whilst we've created a higher low definition of a trend, until we break above 2.1, we are stuck within this range of 1.7 to 2.1. We're also in the upper half of this range. If I show you very roughly, that you can see that there's a approximate midway point here, above the midway point of this very messy range I'm looking at. So for the first quarter of this year, I wouldn't be too surprised if we do remain within this range here. For that to change, we'd need Bank of England to be seriously considering not raising interest rates well into 2016. Then we may see it down to this lower range, and at the same time we need to be more convinced that RBNZ are going to postpone their interest rate rises as well. Now, if I look, these are the monthly, if I look at the weekly charts, I'd say technically, if I was speculating this right now, I'd probably be tempted to take a cheeky little short, because you can see we've broken through this trend line here. We've bounced off this support, but the closer we get to this broken trend line, and you've got a pivotal resistance here, you can see these areas have been tested previously. If we get into this zone, I wouldn't be surprised if we get a bit of a movement down. but you'd need to get beneath 1.9 to be convinced that we're going to come to this lower end of this range. So if we start coming beneath 1.9, I'll be more satisfied that the trade will be good for a short position, but I wouldn't be expecting it to break out this range just off the interest rate differentials alone, because you can see it's been in this range now since beginning of 2011. So out of all the divergences across the economies at the moment, this year is more likely about the big against the US dollar. I've got a bearish call on the longer term this year for Kiwi dollar against the US dollar, and I'm bearish on pound against the US dollar. So comparing pound to the Kiwi dollar, it's a race to the bottom. They're the two weaker currencies, so that would in theory keep these within some sort of range and very, very massive trading. So obviously if you're looking at doing a time-based trade on this, you might be better off doing some sort of hedging strategy to lock in today's rate, so you've got a bit of certainty there, but obviously you do need to speak to a professional to get that. But my analysis on this at the moment is it's not going to be the end of the world. Famous last words. Whilst this could be a corrective move for eventual moves lower, I'd be surprised if we break out of this range in the next few months. And really, if you're going to be looking within the range, you'd be looking at it speculating, not for investing purposes. So any further questions, drop us an email to support@thinkforex.com, and I'll update this, but I'll probably put a trade signal for this later. You can even see on the daily charts we've got a good zone of resistance here as well. So for me, this is setting up for a swing trade short for the remainder of the week. Anyway, hope that helps you trading, and speak to you soon.